Hey everybody, hey, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen, the last Monday of 2025, the last week of 2025, and what a year we had. It was amazing, it was spectacular, full of events, full of craziness in my opinion, but hey, look, probably as every year, right? Look, we'll go through the top key events that happened in the market this year. And certainly we'll pick up on all the instruments that we normally do. We'll see how everything is shaping up. The markets right now are crazy, especially metals. I mean, mind-blowing. But look, we'll look into all that. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, okay. Hello and good morning, ladies and gentlemen. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen. Monday, yes, the 29th. The last Monday of this year and the last week of this year, ladies and gentlemen, what a year we had. Look, it's not going to be a full week for this, in this year, so we're only going to have 3 days. The markets are going to be open, most of them. Like I said, I'll go through all this. But hey, welcome everyone. I hope you're having a wonderful start of Monday. Whoever's joining in right now, thank you very much. I really appreciate your time. Whoever's watching this as recorded, also, ladies and gentlemen, thank you. Thank you for being with me this year. Thank you very much for sticking around, and I hope you continue to enjoy my webinars. Look, before we go any further, as always, I need to have a quick read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to put my usual good morning in the chat room. Good morning, everyone. Good morning, everyone. There we go. Yep. So yeah, as always, I keep on saying this session is meant for everybody who wants to just have a cup of coffee or have a a cup of tea, or maybe neither of the above, but just have and then sit down and chill and kind of listen through, prepare yourselves for the market action. Look, there is a lot to prepare for, and there is a lot to look at. So we'll try to pick up on most. I'll try to pick up on most of the stuff that's happening right now in the market. So also, I mean, you feel free, if you are joining in here right now live, feel free to ask questions. That's always welcomed. Also, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, let's have a look what's happening with the markets. And first of all, as always, let's take a look at the economic calendar. Look, let me just quickly refresh it. It's not going to be the most eventful week, of course. We all understand that. But a few pieces of information are coming out here and there. Now, this morning we got the BOJ summary of opinions. Like we know that the BOJ recently went for a hike, and that was as expected, to be honest. I mean, and I think that the rate path of the path of hiking will continue, and that's not something that we need to be surprised of, because again, they have been talking about this for ages, and let me just open up that chart when that was on Friday the 19th, that we got the interest rate decision here. Let me just open up this chart very quickly. Now, the times have changed, right? I mean, let me just, there we go. Times have changed now, and we are stepping in a way into a new era, because look, the bank kept rates around 0.5 and below, well, for quite a while now. Last time they were above, was back in September of 1995. and now we're getting closer to that 1%. I think that, like I said, I think that what they're going to do, they're going to drag it to 1%. I think that's going to happen. But that, of course, is a bit of a concern for Western economies, in my opinion, because look, we know that the carry trade has existed for quite a while, right? Where they kept on borrowing, or Japanese investors were borrowing their cheaper funds and investing it abroad, mostly in Western economies, and this way getting earning on the difference. So I think that those times are slowly coming to an end for now. At least it seems like that. Certainly subject to whatever happens in the markets. Maybe suddenly they will say, oh, you know what, we need to bring the Japanese rates back down because we need to stimulate the economy. But at the moment the focus is on inflation, and one of the methods of battling inflation, of course, is increasing interest rates. So long story short, for now, like I said, yes, the Japanese market is quite interesting. I'll jump into indices in a bit. But then, look, going further today, we don't really have, like I said, major events apart from like pending home. Probably today is the most eventful day. And pending home sales. Oh, excuse me. Dallas Fed Manufacturing Index. A few pieces of information here and there. Going into Tuesday, we do have some house price numbers. Chicago PMIs are coming out as well. So yeah, nothing. Oh, FOMC meeting minutes, right? We had the interest rate decision by the Fed on the what was it, 17th? Yes. And you remember that when the Fed kind of went for that little cut here as expected as well. Where is that? Let's go back into this. Wednesday. It was Wednesday. Let's just have a quick brief reminder for ourselves. Was it Wednesday or was it? Wait, when was that? Wait, was it on? Wait, that was on the. Sorry, that was a week before. That was the 10th. The 10th of December. There we go. So. Yes, there we go. Yes, there we go. They cut the rate by 25 basis points. So as it was widely expected, no surprises there, but certainly they're right now on the path. They're getting pressured by the White House, certainly. That they want lower rates because right now, the dollar is cheaper. The dollar is cheaper against the other major major currencies. We have the the lowering of the rates. Everybody wants to get as much money into the whole AI capital expenditure, and we all understand where the money is going for, right? So although the the talks are about the that we need to help the consumer and everything like that, but actually it's a big question, if this is going to help. I said it already before in the shows, in all of my shows, that it's they're going to lower down the rates, but that's going to help the companies, because the companies then will use that money towards AI spending, and basically AI spending means cutting down on labor force. So because we need to make it efficient, right? So yeah, look, long story short, for now, it's an interesting year. It has been an interesting year in terms of the Fed. The next Fed meeting will be in January, at the end of January, where we're not expecting anything to happen. So basically no rate cuts, or for sure not hikes. So the rate is going to stay the same, basically. So long story short, for now, we're going to go into January very carefully. We do understand that the rates are not going to get cut, so it will be interesting to see how the market reacts. But at the moment, the market is in this kind of rally, Santa Claus rally, and everybody's just buying, and especially during the last week, when there was like thin liquidity, it was just not a lot of traffic, and everybody was basically, it's like it was one-way traffic, especially in metals. Honestly, those are crazy. Now, By the way, for those who are joining in, honestly, like I said, if you have any questions, please do ask. I mean, you're more than welcome with your questions. I'll try to answer those. So yeah, going into this week, then we had Wednesday. We're having one Wednesday. Nothing major, to be honest. It's Chris. It's that was in December. Sorry, Wednesday, 31st. So New Year's Eve, yep, major markets are, let me just double check because let me just double check what's happening with the major markets on, yeah, on. So the US is going to be open. They will be, of course, they will be closed on January 1st. And for now, I mean, it's going to be a full day for them. No kind of shortened days. Regarding UK, for example, UK, it's open, by the way, right now. So it's going to be the normal. Nah, sorry, it's going to be a shortened day on the 31st of December. So if you are trading something UK related, remember that they're going to have a shorter day, shorter trading day on Wednesday. With regarding the, let's say, Japan, I think is going to be like full on normal. Wait, sorry, I do apologize. 31st of, yes, 30th of December is going to be a normal day, and then the 31st, okay, sorry, from the 31st of December, they're going to be closed up until the 4th, until the 4th, yep. And basically they're going to come back on the 5th of January. So yeah, if you are trading something Japanese related, be careful because there could be like thin liquidity, and this, like I said, from the 31st of December, they're going to be closed all the way up until Monday. So on Monday they're going to come back. Regarding Shanghai Composite, for example, Shanghai Composite they're closed. They're going to be closed on the 1st, 2nd, and 3rd, and 4th. So regarding going further, I think yes, they're going to come back on the 5th of January. So also some thin trading action. Well, to be honest, there's like the 1st is always a closed day, and then the 2nd is a Friday, so might as well take the day off, so which is logical. So yeah, ladies and gentlemen, keep your eyes on that. The US, like I said, the US market will be open on the 2nd of January. Normal trading hours, yes, but then yeah, and then their usual resumption on the 5th of January. So okay, ladies and gentlemen, let's take a look at this action here. Let me just leave all these charts here. Let's take a look at this action, ladies and gentlemen. So, okay, like I said, I did have a pause, and I did not really, I was keeping an eye on the markets, but certainly the markets were going crazy. Probably the main market I was keeping an eye on during my absence was the metals. And those were like wow. But in general, indices are also attractive because, again, this whole Santa Claus rally, this thin liquidity, it did allow these major indices to continue to push higher. And Nikkei, looking at this, look, this is where I left off last time. I said that if we do climb back above the kind of 50,000 zone, there is a greater chance for this one to push higher. Now, looking at this picture, it's kind of looking interesting here from the 51,000 perspective. So 51,000, if we do climb above it, I think that there is a good chance for a further move north. Of course, we're taking everything with a pinch of salt. From the technical side, like I said, it looks a little bit more bullish than bearish. However, this is what I kept on saying last time. So although this looks like a nice little potential ascending triangle pattern, however, if it is that, then yes, certainly the greater chance for this one to break out is to the upside. That said, if it is a triangle, we look at the prevailing trend. The prevailing trend was to the downside, and basically that kind of leads to the point that maybe, we could see a breakout lower. That, however, I'm taking a very careful approach here. If we do break this upside line, the lower side of the potential ascending triangle, then yes, I'm going to lean a little bit more towards the downside. Shanghai Composite, very quickly, this one continues to push higher. I think, like I said, is going to still maybe okay. We're at an interesting spot. So if we do clear this, because again I can see that a few times we tried to clear it but kind of failed. So yeah, 3,968 zone ish here is the one that I'm watching, because at the moment we are kind of flirting with that area. So let's let's not over exaggerate, or like over become way too optimistic. There we go. We get way too optimistic. We need a clearance. We had a great rebound here from this area. Fantastic. We cleared this zone. I talked about it. I said then the next target is theirs, and this one we got the hit. And now let's see if we can go further, a little bit further north. Let's jump into Dow Jones Industrial Average. So basically, I have the Fibonacci here. It kind of worked ish, but you know what I really want to do? I want to get rid of everything and start fresh. Now look, this year has been quite uneventful in the US, especially because when remember this, that the US president got inaugurated in January. The markets, then what we saw, the cryptos, selling off very rapidly. Let me just actually, actually, let me just jump into cryptos very quickly. I'll briefly pick up on that. So in January, we started seeing a good, kind of stalling moment. Then we started selling off. Then around like April time, when this is the moment, this is the moment where we, hit a low here. Indices also hit a low, because we know what happened, because there was a big board with numbers and percentage numbers next to the head of the U.S. leader during a press conference where he announced tariffs, basically, and it was a very interesting moment. The market didn't like that. We saw major declines, but to be honest, I think that was done probably deliberately, because again, we were hitting all-time highs here. This is Dow Jones Industrial Average. Imagine this, at the end of 2024, we were hitting all-time highs. We were hitting that 45,000 territory almost, and actually not almost, but hitting that. And it was really difficult to justify buying here at these levels. So some sort of a reset was needed, and well, that was, I think, that market shock was perfect. So it was a good build up towards it. There were talks about tariffs. Their markets was declining, and then eventually, boom, there we go. We got the decline, and then very quickly, very rapidly, it reversed back up. It all stabilized, and look at this beautiful move here. We pushed back above this territory here, this 41,000 zone, and well, since then we were rallying, and we're getting closer to that 50,000 zone. And to be honest, I'm really curious if that's gonna really happen, because well, I think that could happen. To be honest, it's a psychological number. We're forming like higher lows, and right now we just need to overcome the current all-time high. Like, what's new, right? We've been here, done that before. So let's see if we can overcome this 48,886 zone here on the Dow Jones Industrial Average. If we clear that, I think I'm gonna be slowly targeting the psychological 50,000 zone. I mean, I really don't see why not. The market likes symbolism, right? Because the market is driven by people. Somebody might say, well, algorithms maybe, but algorithms are written by people. So you have that symbolism in mind, right? I mean, you have these like nice beautiful numbers on the charts, and it kind of tends to hit those. Not always, don't get me wrong. Sometimes let's say we could see, let's say in this case, right, we could see a move higher towards the 49,900, and then boom, it fails to reach the 50 because everybody was targeting 50, and then we will see a reversal back down. So long story short, for now, look, from the Dow Jones perspective, I am cautiously bullish because I need a confirmation break above this 40, above this current all-time high, and then I'll get comfortable with some higher levels. For now, for me to get bearish on this one, I will probably, I'll probably start looking at some lower levels, maybe from around this 48,133, but then I'll get a little bit more comfortable with the downside if we do fall somewhere below the 47,850 zone right here. And then we'll just kind of take it from there. But at the moment, yeah, I just need to be cautious. I think that there is still room for the upside. However, current situation, although we don't have like major economic events, only from the 5th of January that we will start getting something a little bit more exciting. We'll kind of start getting back to normal. The week then, yeah, let's have a look. Actually, let's have a look. On Tuesday, nothing. We have a few S&P global composite. Yes, some S&P global composite final PMI numbers for composite and services from the U.S., Canada here, from Europe as well. Wednesday, we have a lot of inflation numbers from well, a lot. One inflation number from from Australia. Again, some PMI figures coming out here and there. Germany's unemployment, European CPI numbers are to be watched on Wednesday the 7th. I'll be back, by the way, on the 7th. So ISM services PMI. Now this is something that also something to keep in mind as well. That's a big market mover. And let's like I said, let's not underestimate that figure as well. Canada's IV PMIs, JOLTS numbers. So basically, this week when we're getting back on the 5th, we're gonna have some job numbers. Now, look, let's jump into Friday. We should be getting the non-farm payrolls from the U.S. So in a way, I think that 2026. So I need to get used to saying that now. From 2026, I think that what will happen is that the Bureau of Labor and Statistics of the U.S., of course, will try to gain back their credibility, because at the moment it's shattered, and we know that this year. We know when the government went into shutdown, because that was another major event that happened on the economic side, although it was a political thing. But it had its major impact, and well, the government went into shutdown, and throughout of November it was a mess, and they came back, and then we were, all the data from the Bureau of Labor and Statistics was all messed up. I mean, look, I talked about a lot of this in my sessions in November and December. So, and this is where ADP stepped in. So that's why we're going to be very carefully watching not only the NFPs, but actually, okay, JOLTS on Wednesday. On Thursday we should be having ADP, if I'm not mistaken. Let me just double check. JOLTS. Okay, where's that ADP? ADP employment change. There we go. That's happening on Wednesday. So basically, we're gonna have okay, so we're gonna have ADP first and then JOLTS. Well, this is a shift a little bit, because it used to be before, in the good old days, JOLTS first on Tuesday, Wednesday was ADP, and then Friday we would get the non-farm payrolls. Well, now it's everything has shifted a little bit. But anyway. Nevertheless, ADP is going to be quite an important one. I think that, from my personal opinion, that it seems like they're trying to kind of put ADP down back to its secondary place. Although I would actually say that I think ADP is a more trusted number right nowadays. Well, at least for now, and we'll see how it goes. Of course, maybe it will all change back again if there will be some sort of like a glitch or something in the ADP numbers, or some sort of like bad headline comes out saying that, oh my God, like ADP numbers are miscalculated, and blah blah blah, and stuff like that. And this is where this is how the market works. You kind of you bring some companies down if they're not favorable to you. So very simple, politics wins. So long story short, but that's only my view. So yeah, it's going to be an interesting week. So coming back to the situation with the with the events. So in terms of, like, to me, those are were the biggest events. And in terms of equity worlds, in terms of central banks, we had central banks, going for some cuts. The Federal Reserve is gonna come out on the 28th of January, yes, with a interest rate decision. So where is that? 28th of January. That's going to be, of course, Wednesday. Let me just launch the chart here. Okay, so look, in 2025, right? The Federal Reserve cut its rate by once, twice, and three times, thrice, right? And I think that the further path kind of sits towards towards slightly lower levels. That said, how big of a lower level? If you would ask me, like, to to use technical analysis on this chart, although should not be doing that. You have your Fibonacci retracement here. Oof, what am I doing here? No, the wrong one. There we go. So you have your Fibonacci retracement. So basically, maybe, like, going to 3.5. I think that could be quite perfect. Again, totally don't do that. It's just for fun. This is purely for fun purposes, because it's if we're looking at something a little bit lower, like 50% retracement. So I have it around 2.88, 2.90 basically. But let's say, dropping into 3%, it could be an interesting option. I think we're on that path. But let's see, of course. But again, let's say I don't apply Fibonacci on this. It's just, like I said, purely for fun purposes. So yeah, we'll see how we play out right now with the Dow here. Let's see what's going to happen. Which way are we going to go? For me, like I said, for the downside, I will have to take a bit of a more conservative approach. I'll just wait for a drop below the 48,133 zone, at least initially. And then I'll take it from there, but certainly we're very close to the current all-time high. It is a greater chance of breaking down. It has a greater chance of breaking down. So let's see if that happens. The S&P 500. So yes, we hit a new all-time high. So look, and NASDAQ is still further away. So if we follow the logic, and this is what I talked about previously in my previous sessions, that if we do follow the logic that whenever, let's say, one index hits from the three, from the Dow, S&P, and NASDAQ, so if one index hits the all-time high, then we see the other one hitting as well. The other, like the one that's closer to the all-time high. And in this case would be Dow Jones Industrial Average. So S&P has already hit the all-time high. Dow Jones is very close to that. And NASDAQ is kind of really, concerned. There are concerns here, of course. Investors are still worried about the whole expenditure of these big tech companies, how they're circulating money between themselves. And, this is kind of, in normal world, it kind of calls as, like, it's called money laundering, right? But it doesn't apply for them. But look, it's okay. But it's not money laundering. It's circle economy. But yeah, we'll see how it goes, of course. We'll see. For now, it's an interesting moment that we're living through, for sure. Yeah, let's be very careful and cautious for now, okay? But with NASDAQ, look, I will say it this way. If I'm more positive about Dow hitting an all-time high, with NASDAQ, I'm really cautious for now. I don't want to rush into things, okay? I'm gonna, if we're hit it right now, let's say, for example, we're seeing NASDAQ kind of actually selling off a little bit. It's currently at around 25,560 zone, so which is basically below where it closed on Friday. But as long as it stays above this 25,400 and kind of what's the 35-ish zone, I will say that I will consider something like this, basically. So I'll consider a move a move back up. And yeah, and then we'll go from there. So as long as we stay above this area, yep, I'm going to continue targeting the upside. Uh, Look, again, be careful right now. It's like I said, the liquidity is thin. A lot of companies are out, but I think today is kind of the last one of those last days where you can still squeeze something out of it because Asia is still open tomorrow. But then 31st we're done. So yeah, I think that this period right now would be the most eventful, or this period, I mean this day would be the most eventful, and then it will calm down, and then we'll just wait for political events, because I think that what's going to happen during this period, I think that there will be a lot of politics coming out. We still have issues in the Ukraine Russia conflict. There is now threat that the US is going to invade, for oil purposes, Venezuela. And I mean, yeah. The world is crazy. The world is crazy. The world is stupid. We keep on repeating the same mistakes as always, as us as humans, and we don't learn. Maybe we don't want to learn. It seems like it's kind of more. It seems like it's more fun for us this way, unfortunately. Anyway, but yeah, coming back to this situation here. So let's see what's going to happen here if we're going to stay, excuse me, above this 25,435 zone. If we stay above that, great. I will maybe consider another push back up. For the downside, a drop below that hurdle would be nice. The German index DAX. So yes, we're getting a nice, beautiful hold up. The DAX is open. By the way, Germany, regarding trading hours, the German trading hours. It's going to be similar as to UK, what I said to you, that at the moment they're open, but they're going to be closed on Wednesday fully. DAX is not operational on Wednesday, Thursday logical, and then Friday they resume the trading. It's going to be a full trade on the 2nd of January, but yeah, 31st and 1st. And this is exactly what I said, that today and maybe tomorrow a little bit, we could see some nice good action. Wednesday, I think we're done, so just like I said, just some let's keep an eye on politics, because again, that's what's gonna probably drive the market during this or the after hours market during this period. Look, so for now, the technical picture for me stands this way, that if we do pop above this 24,384 zone right here, and we stay above it, because we have been seeing these false breakouts, but if this time we stay above that area, then yes, great, I will consider some moves to the upside. For the downside, I really would need to see a drop somewhere below this 23,930 zone. I do understand it's a lot of area to miss out on, but to be honest, I really don't want to rush into things, okay? The FTSE 100, so yes, this one is very close to this area, very close to the all-time high. So let's see if this can actually break by the end of this year. That would be really fun to see, actually. We're very close. So then we'll just kind of take it from there. We'll see what's going to happen. But for now, the FTSE, well, it's very, very close to this all-time high. Or maybe it'll leave this one for next year or something like that, so that there would be something to feed on in the new year in January. Very quickly on DXY, ladies and gentlemen. So this is what I wanted to show you, and so far, this year DXY, well, it's not the best performing kind of currency. Look at this. We were at around 100, and at one point we were actually here. Actually, you know what? Let me just remove all the drawings and have a fresh look. So this year we hit a highest point near the 110 zone. Now we're balancing below that 100 zone and below that 100. And even on the monthly chart, we actually look quite bearish. We're below my 100-day EMA, but we're still above the 200-day EMA. So in a way, there is a chance of a further decline here. If we come back to the daily chart, this looks to me a little bit bearish, but I would prefer to wait for a clearance of this area. We did that on Wednesday last week. but we failed to stay below it. So if we do once again drop below the 97.87 territory right here and we stay below it, then yes, great, I will consider further declines. However, that said, I am being very careful with the US dollar. Yes, the US administration needs a cheaper dollar because, again, we understand. So it's like the whole point is right now to, make their boost the export, right? I mean, boost production inside the country, make the US dollar cheaper so that it would be more attractive to establish your business in the US, like build factories in the US, and then kind of, we'll go from there. So you'll have cheaper, you'll have access to cheaper lending, you will have weaker currency, so it will be a little bit more attractive for foreign countries to other countries to purchase goods from made in the US. At least that's the theory, right? However, there's a lot of factors that go into all this. I mean, labor, that's one of the things, because let's face it, you're kind of deporting a lot of people who are actually working in those factories. So who's going to go and work? And it's going to be, I think, a tricky one. So, yeah, like I said, it's an interesting moment. It's an interesting concept, idea. Will it work? We'll see. At the moment, the U.S. dollar is kind of losing traction, but again, I'm not that I'm going to be very pessimistic on the U.S. dollar. No, I think it will pick up at some point. You normally you go in these cycles, and at the moment we're in this moment. We're in this situation where we need a cheaper, when the U.S. economy needs a cheaper dollar. But then there will be a moment where I think you will have to strengthen it in order to please the population, your own local population, which cannot really afford much, So we'll see how inflation plays out in all this, because again, if I think at the moment the fear is inflation, that there could be higher inflation at some point, and this is where the Federal Reserve is kind of is sketchy a little bit. It's a little bit difficult right now for them probably to justify all the further rate cuts. So I think that for now, in terms of rate cuts, by the way, I think that we're going to have one, but only in April, as this column says so. And this is the April forecast, that by April we should have one cut, which I actually believe that could be the case. Why? Because, well, look, in May, Mr. Powell kind of goes away. And I think this is going to be his farewell gift to the White House, and the last little, cut. Although, he doesn't, I don't think that he wants to do that, but I think he's kind of forced. He wants to leave on good terms, which we understand. You want to live a healthy pension and just kind of, not bother about everything. So, and then you're leaving. So, hey, here you go. Here's the, the rate cut. And I think, yeah, we're gonna get one. I don't think that we're gonna get two by April, by May. When he's gonna leave, I think it's gonna be just one, because he's still worried about the economy. He cannot really leave on the fact that here's another rate, and there we go. Welcome inflation. So then he'll get blamed by by the market at why the hell you should be independent, right? Why did you do this? So, long story short, for now, I would say this way, that I'm keeping an eye on the US dollar. The 97.87 territory is something that I'm watching. If we do drop below that, yep, we could see a little bit of a move to the downside. Ladies and gentlemen, let's jump into currencies very quickly, because then I really want to jump into metals, because those are crazy. AUDUSD. So look, again, also we had some violations here and there, and I think it's time to remove everything and start fresh. One thing that I'm watching right now is this peak, the highest point of September of this year. We cleared that. It was previously the highest point of this year, but then we cleared it, and we cleared last week, and now we're just sitting. We're kind of oscillating around that level, I would say. So, long story short, for now, let's keep an eye on this one. Let's see what's going to happen. Let's see if the US dollar continues to weaken. If so, then yeah, further upside could be possible in this one. But certainly we are at a very interesting spot on this pair. So if you are watching this, if you're looking for a short at this point, I would say just be careful. if we start falling somewhere below the 0.6686 territory, then yeah, okay, this is where I'll get a little bit more excited with the downside. But for now, until then, just observing the price action. AUDNZD, let's see how we're finishing off this year. By the way, with AUD USD, let me just have a look. We started off the year here, and we started off the year here, and basically, yes, a great gain of this is a great gain of what, at least 8% this year so far. So on this pair, well, congratulations if you were long. AUDNZD, so pushing higher, continues to push higher, but you know, after reaching the all-time high near last month, near the 1.1636, we kind of retraced back down, and we're trying to climb again. But look, Australian dollar is on the stronger side this year. Certainly, we can see that. You know, we're not blind. But hey, in general, you know, it was a roller coaster ride against its neighboring New Zealand dollar. So gain of 4% at least. So that's not bad. But probably against the US dollar is better. AUDJPY, certainly, yes, we understand, because it's our risk on, risk off monitor. And yeah, we saw this one gaining. Let me just get rid of everything, to be honest. Let me just remove all the drawings. So we saw it gaining, and it's fine. Logical, because the stock market has been pushing higher, and I think that there is still room for more, actually. So that's where, you know, the confidence in slight confidence in further upside in the markets, in the stock market, could come, because AUDJPY, like I said, is our risk on, risk off monitor. And it's still showing, you know, upside momentum on a monthly chart. This is a monthly chart, by the way. So I'm going to go through these, you know, pairs. So on a monthly chart, because this is quite interesting. So for the year right now, we have gained around 8% on this one. Okay, quite logical. So I think that there could be more upside, but then, yeah, going into next year. New Zealand dollar against the US dollar. So this one's a little bit tricky. I think that New Zealand dollar did suffer a little bit, so, but we did gain, you know, we did, yeah, push higher, but now we're just like around 4%, less than 4%. At one point we had almost 10, but yeah, now we're back to around 4%. I think this is how the year could end. EURUSD, ladies and gentlemen, EURUSD. Of course, the Central Bank of Europe, the ECB, the European Central Bank, was in focus. And what's interesting here is that I think, looking at this chart, let me just get rid of all the drawings, this looks very bullish. And honestly, to me, like I said, given that there is still this path towards lowering rates in the US, it's still active, so this can apply pressure on the US dollar. And this is where, you know, we could see US dollar pairs kind of where the US dollar becomes like weaker against its major counterparts, including euro. And looking at this picture, honestly, this looks very, very, very bullish. Look at this. This is you know, this barrier that we're watching. We're seeing this upside line right here as well. Guess what? An ascending triangle pattern. Also, the prevailing trend is to the upside. So kind of all the stars are aligning towards, you know, a further move higher. And in general, let me just check if this is, yeah, why not? Like this, I think it's quite doable. I think it's a good downside line to watch. This is taken from the highest point of 2018. So roughly around the 1.20 zone, I think the euro could travel to. I think I'm gonna, you know, make a bold statement here, and I'm gonna say that, you know, I'm gonna aim for the 120 at some point. If we do clear and stay above the 1.1788 zone, somewhere around here, because we keep on getting false breakouts, and yeah, and by the way, I have to remind you, this is a monthly chart that I'm looking at, because again, it's you know, it's you need to be very careful here. You know what's interesting here? At the beginning of the year, and this is where, you know, some people maybe forgot about this. At the beginning of the year, we were actually just fractionally above one. That parity, you know, a level 1. Now we're like already considering 120, and in a matter of a year, we gained around like what, 13-14% almost. So wow, that's spectacular. And honestly, this was the best pair probably to hold long if, unfortunately, with holding costs and the swaps, that would have been a bit of a problem. But certainly, it may be, the costs could be outweighed by the return, but we never know. Very quickly on EURUSD, this one's flat, almost flat for the year. However, although it's flat, I do like it, and I'm waiting for this one to actually, and I'm jumping back into a daily chart. I'm waiting for this one to actually clear this 0.92 territory, and you know what? For now, I will abandon that idea. If I'm thinking that the euro could still rally, well, I'm abandoning this idea. That said, the question is, okay, it will rally against the US dollar, but maybe not the Swiss franc. So, but the Swiss franc, you see, the guys there cannot really hike rates because they need to boost demand, and I think Switzerland is like the new Japan, where it's gonna happen, where the carry trade will happen. So from where the carry trade will start. So Switzerland right now entered a period. Let me just show you what I'm talking about. Switzerland interest rate. There we go. Look at this. At the beginning of this year, the rate was around what, 0.5? Yep. And slowly we dropped. We saw 2 cuts this year, and we dropped it to 0. This is, I think, we're entering a new stage where this is going to be quite prolonged, and I think that the 0% is going to stay for a while. Look at this. Last time we stuck around at 0 was back in from 2011 till 2014, for a few years, right? Then we dropped it to to minus 0.75, and it was from 2015 all the way to 2022. Just your average 7 years. That's that's wow. So anyway, but certainly doesn't beat the Bank of Japan. Nevertheless, there is an option here. So congratulations for those investors who are going to pick up, those cheaper credits from Switzerland and put them somewhere in some other maybe bonds or something, like in developed country bonds or something like that, and gain on that. Anyway, long story short, for now, we're watching this carefully. Like I said, that's why I'm not really I don't really believe that the Swiss franc could strengthen unless the stock market collapses drastically, and then this is where the interesting bit comes in, and then we could see kind of maybe the Swiss franc gaining just purely on the fact that it's a safe haven. Yeah. So go further a little bit. EUROJPY, an interesting one. So yeah, like I said, I was talking about Japan market earlier, and said that, look, the guys there are going to try to increase rates, and in order to stimulate, kind of save the Japanese yen, because it has devalued quite a lot. Look at this year, EUROJPY. I mean, wow, what a move! Like from the beginning of this, let me just jump into a monthly. From the let's actually reuse this one. This, I think this is quite better in my opinion. So from the beginning of this year, where's that January? There's that January. I mean, also like the EURUSD, 13, at least around 13%. That's what we're gaining. I mean, wow, that's spectacular, ladies and gentlemen. That is spectacular. Look, I would say this way, that for now I'm being very careful, very cautious, certainly. I'm not really rushing into things. I'm gonna, like I said, I'm gonna keep an eye on this, of course. But at one point, this will have to reverse lower. And maybe we need to just see a little bit more action from the BOJ, and they're trying to step into that action by hiking rates. So at some point, like I said, this will reverse back down. I'm not really I don't doubt that. But could we see more upside? Yes, because my next target is around 188.22. That's what I'm going to aim for right now. That's the highest point of 1990, ladies and gentlemen. We are hitting levels which we saw back in 1990, 1991, actually 1990 more. And we had a bit of a crisis then after that. Look at this, after this major rally. This is a monthly chart, by the way. So, we had the crisis here. Soviet Union collapsed. So, yeah, it was a turmoil here. So, then we started seeing a reversal back down. So, long story short, for now, again, because this reversal happened mainly due to the fact that safe haven demand picked up. Japan, let me just show you what happens. GP interest rates, so Japan interest rates. So yes, back in 1990, look at this. We saw this is when Japanese yen, the interest rate was around 6%, and basically the pair started strengthening very rapidly. The markets were in turmoil, and the Bank of Japan was forced to start their cutting program very very rapidly here. There we go. In order to kind of to make their exports a little bit more attractive, because they were way too expensive to the world. So there we go. For now, long story short, we're seeing something like this happening again. They're trying to go for those rate hikes, but again, if the stock market suddenly reverses back down, they will have to be very careful. And I think that maybe we'll see we won't see levels like that, no, but we could reach one. That's why they're trying to rapidly increase rates in order to be able to maybe cut them again. But at this point, and to be and what you're probably getting from my words here is that, hey, is there a financial issue coming up? Could be. Because again, you cannot really justify all that capital expenditure that is done on AI. Let's jump into GBPUSD very quickly, and I'm gonna pick up on other asset classes. I'm gonna go into commodities. So for now, looking at this one, let's remove all the drawings. GBPUSD had a great move. As well, because again, the US dollar was on the cheaper side, and it still is. Oof, no, that's not this one. That's what I need here. So we had at one point we were gaining almost 10%, and now we're just around like below 8, which is still fine. USDCAD. Now this one's interesting. Over the past month, we had a major decline here. There was some strengthening moments in the U.S. oil, in oil in general, and we're seeing this Canadian dollar kind of strengthening on that as well, and pushing lower, cheaper, lower dollar, and oil on the slightly stronger side. But actually, I kept on saying, and I will talk about this again, that I'm still kind of bearish on oil, to be honest, and I don't want to rush into things. Yeah, ladies and gentlemen, so for now, like I said, I will keep an eye on this area. I do like this 50-day EMA on the monthly chart, which is around the 1.36 territory. I think it's a good target. Let's see if we can reach that one. USDJPY, this is, despite the weakening US dollar, still the yen was suffering more. So the yen was suffering more. And okay, look, we're kind of flat for the year on USDJPY. So it's kind of, it's the battle of the two weaker currencies. So it's kind of really flat. So if you were in this pair for this year, initially we're losing. Then, if you picked it up at April time, then okay, great, wonderful. What's not to like here? But if not, if you were from the beginning of this year, then yeah, it's a bit of a bummer. USDCHF, again, this looks a little bit more bearish, to be honest. So let's see what's going to happen. Anyway, ladies and gentlemen, let's jump into, first of all, a daily chart, and second, into gold. Wow, what a move we had, ladies and gentlemen. Look at this. This is just, crazy action. Like the demand for gold, and not to mention silver, that is just wow, out of this world. And you know what? I will stick to the words that I said before, that when people say that you need to buy safe havens when the markets are turn like sour, because this is the safe haven and everything. I would disagree a little bit with that in a way because I believe that you need to buy those kind of before there is a potential downturn in the markets. Why? Because the fear, everybody, the big money knows, there's something brewing, and you start acquiring the safe havens very rapidly, and this is a good example that if safe havens like are rallying that much, then the market knows something. I'm sorry, but this is like, yes, we can pour it on demand that the whole AI infrastructure needs, more metals, more copper, more silver, more platinum, palladium, and everything like that. So yes, that is true. However, if everybody's massively purchasing these metals like that, then like I said, the market knows something that us mortals probably don't, and this is where this is becoming worrying because look, I think that when the times go rough, I think that these precious metals will decline a little bit because again, first of all, on demand, because again, if the demand for this whole AI infrastructure falls, you don't need the conductors that okay, you still need them, but you need them less, so the market adjusts accordingly. There is demand, yes, for storing wealth, but I think that people will store wealth somewhere else, so maybe they will jump into government bonds or something like that, and those are going to be the more attractive options. That said, so for now, like I said, and also when the times go rough, the governments need to tap into their reserves because again, the moment they're the biggest purchasers of these metals, and they need to tap in because you don't want to switch on the printing machine. You need cash, you need money, and why not to offload a little bit of that gold and silver and the other metals in order to gain some money because again, it's at all-time highs, because you know that you will need to fund your economy a little bit more, and yeah, that's going to be a problem. There could be a problem later on. So long story short, for now, what we're seeing, it reminds me of something like that, and let's see if that's going to be the case, of course, but I'm being very careful right now. So yeah, we're seeing gold right now reversing from its all-time highs. The all-time high has been near the 4,550 zone. So yes, there we go. Nice, beautiful number there. And we're retracing now, and we're kind of almost like well, actually not almost. We're like, yeah, almost $100 to the downside today already. That is a lot. Remember those days when gold would move $100? That would be considered as something crazy happening in the market. Well, those days are long gone because now, percentage-wise, we're just around one. Let not if even full 2% down. So that's normal. However, point-wise for traders, that became quite a lot. So yes. So for now, look. I mean, we're to the downside. The markets are taking some profits off the table, which is logical because looking at the monthly chart, I mean, yeah, that is just insane and crazy. From the beginning of this year, let me just show you. From the beginning of this year, this is a weekly chart. Let me just jump into a monthly. This is a monthly chart, and look at this, ladies and gentlemen. This is just, we were at the beginning of this year, we were at 2,615, roughly. Now we're like, wow, gaining around 70% for the year. Speaking of silver, this is another nightmare. I mean, look at this. This tonight actually we hit the $84 mark. I mean, that was like, wow. That was spectacular movement here, I would say, and now we're seeing this retracement. Look, I talked about the downside, and I said to you, look, this is not normal, and but on the other hand, this is a very key and important moment that we're going through in history. Why? Because we only 3 times that we had such parabolic moves. Look at this: 1980, 2011, and now 2025. And every time we had a major reversal. So just like I said, and we're finishing off the year with a beautiful move higher. The monthly chart, look at this. This is a monthly candle. Oh my God. Show me another, unless it's a, I don't know, Turkish lira or something against, some British pound. But for the year, at one point, we're gaining almost 50%. Wow, we start off the December, we start off with 56. Sometimes you're thinking, wow, this is, the gains that you cannot even get in a year. We're doing that in a month. To me, I'm sorry, this is pure speculation and this is like unlogical. So, okay, we'll see how it plays out, of course. But certainly, I am bearish. At one point, I will be bearish because it cannot drag on like this forever. And this is just, yeah, this is just insane. So let's see what's going to happen. Of course, stepping into the new year, I'm really curious what's going to happen with the next month's candle, how it's going to behave. Can we go and hit the current all-time high? This is where it is. It almost, like I said, 84, but it depends on where you look at it. Some cash indices, some platforms show 84 actually. So yeah, and that's crazy. 83.75, and now we started off the year here. Where's that? January. There we go. It's an insane 1.8, an insane 100 and almost 190% for the year. At the moment, we're doing only 150%. Okay, I mean, only 150 for now, right? Wow, this is spectacular. And like I said, I will stick to my guns and I'll say that it's an extraordinary moment that we're going through. And I do see resemblance. That so at one point it will have to reverse lower. But hey, maybe we'll have another like last jump here. For now, look at this. This is a daily chart. Like we're hitting this 83 and at 0.75, and then we're now at 74, like almost $10 in one day to the downside. Something's brewing up, and let's see, if we can actually see a bit of a rebound here. Maybe, ideally, I would like to see a rebound. I would like to see this one ending up with maybe like something like a doji or something, but something tells me this 71.670 territory could be an interesting level for today. So just be careful. Be cautious and just take everything with a pinch of salt, ladies and gentlemen. Platinum, just a quick glance. Yes, also declining. Palladium, look at this to the downside, and it seems like it wants to go further south. Copper is it's kind of holding on, but still showing signs of weakness already. Jumping into sugar, one of my favorite ones here. This one's near a key area of resistance that I talked about before. So this 15.25, we do get a nice clearance and we do stay above that on a monthly chart, then yes, great, I'm going to go to the upside. WTI oil. So with this one, I kept on saying I'm going to be bearish on this one, and I really don't believe that we could see some more downside or more upside. Unless unless the U.S. decides to just kind of start striking Venezuela for to capture more oil, the typical pattern basically, because that's Venezuela has the best oil in the world. The quality of their oil is one of the best ones, and it's like heavy crude. This is what the U.S. refineries need. So otherwise, the U.S. refineries are going to go out of business. Look, for now, like I said, that's the only thing that could drive oil prices back up. That said, the current Ukraine-Russia conflict, and if there's going to be some sort of peace in there, then we'll see Russian oil back into the market. So that's going to increase supply. So again, which one's going to outweigh which? The increase in Russian oil supply, or in general the increase in the global supply because of Russian oil, or actually will we see the Venezuela problem, the U.S. Venezuela problem kind of outweighing this and pushing everything to the upside. At the moment, that's why I took a conservative approach, and I'm waiting for a drop below the 55.15 zone right here in order to go lower. If I can get that move, amazing. More sellers here could join in. For the upside, I need to see a break of this downside line, which is taken from the highest point of July. And if we can get that move, great. I'm going to go to the upside. Brent oil, similar story. We're watching this 58.44, 45 zone ish. If we can stay, we can stay below the 61 territory, $61 mark. I think that there is a good chance of dropping all the way to 58.45. Natural gas, this one continues to slide. Yep, I think that warmer winter is having its toll. So yeah, it's for now. It's yeah, it's I think it's gonna go further south probably if we do break below the 3.75 territory. And ladies and gentlemen, let's finalize this one with Bitcoin, with basically another cryptos. Okay, we had a nice spike to the upside. In general, what I'm seeing here is it seems like it wants to go for a higher high. Now, we have some interesting levels here, and this one I'm watching. Actually, let me just get rid of everything, all the drawings here, and start fresh. So, first of all, monthly chart for the year so far. For the year, we're not gaining anything. We're actually in the losing side. Not much, but still, so I think that we could stay flat. If we get back to 93, 94,000, I think we'll end the year flat, and that's kind of it. If we would have a yearly chart, then we would just see maybe some sort of like a shooting star moment here. So in a way, there is a chance for a drift lower in this one, but look, let's be careful here, right now, okay? Looking at the monthly chart here, the 20-day SMA within the Bollinger Band here that I have, it's acting as a good area of support. And if we do break below it and stay below it, then yeah, okay, look, I'll have to go lower. I'll have to target this kind of 75-ish area, or maybe even below that. These are, like I said, these are good levels here. But I think there's way too much money invested in this whole Bitcoin ETFs, and recently we saw, Abu Dhabi, I think, purchasing a lot of Bitcoin, investing a lot into IBIT, into this ETF here, iShares Bitcoin Trust ETF, and I think that yes, this is where the interesting moment could happen. I think that yeah, we could see this one reversing back up again, maybe a little bit more to the downside. A little, it would be interesting to see, if we can reach this 43 territory on the IBIT. But for now, we're watching this area here on Bitcoin, and especially on the daily chart. Looking at this, looks a little bit more bullish than bearish, and yep, it seems like we're forming higher lows. Can we go for a higher high? Let's see, because first we need to overcome this kind of 90,000 and a half zone, and then yeah, we'll get a little bit more comfortable with some higher levels. Bitcoin Cash, I'm loving this one. This one's showing strength here, continues to show strength. So hey, why not to consider further upside? So as long as we stay above the 607 territory, I talked about it. I will continue targeting the upside. To be honest, this one is, to me, wow. But if it's going to clear the 650, wow, I think this is opening the door even to higher levels. I think that the next target for us would be somewhere around here, somewhere around. Is this the correct level? Yes, 700 and kind of 18, 19, 20, something like that. That's what I'm going to aim for. That's the highest point of 2024. Good potential target. Let's see if that's going to happen or not. Ripple. Ripple is, yeah, it's trying to climb back up. It's still below that psychological 2 level, but hey, this 1.1990 is actually important as well. If we clear this, I will go to the upside. Very simple. Ethereum also pushing higher, trying to, make its way to the upside. We're still above this upside line here. Maybe it depends, how you draw it. Maybe you want to draw it this way, just to have it a little bit shorter. So we need a clearance of the 3046 territory. If we can get that, great. I'll go to the upside. Litecoin. Litecoin is very interesting here as well. It's trying to make its way back above that $80 mark. If we can push and stay above that, then great. Okay, I'll consider some higher areas. Dogecoin trying to make its way back up, but look, this one's a little bit on the weaker side, and again, it's driven mainly by one person, so I really don't have like strong feelings for this one yet to the upside. Polkadot. Now, Polkadot is okay. It basically lost a lot this year. Let me just jump into a monthly. So this is the monthly chart here. From the highs of January, the highs of this year, we actually dropped around like almost 80%. But okay, let's say we opened up here, and we still lost 74%. So, we're now traveling lower, and we're still on the lower side. So it does present itself with some nice opportunities. However, I would say just, be careful right now. It's trying to make its way back up. If it climbs back above that psychological 2 level, that's great. Okay, well, we know I'll consider some higher levels. But at this point, I just have to be very careful. Tron. Now, this one I like, but it's a little bit of a mess here. So I would say what I need on Tron is a clearance of this little territory right here, maybe, something of this. We're currently in the box, and I need a clearance. I need to think outside of the box, and I need to see this one actually exiting one of the sides, breaking through one of the sides, and then I'll get a little bit more comfortable with the next short-term directional move. Ladies and gentlemen, that is it for this session. Thank you very much. Thank you for this year. I really appreciate that. I think, it was a great year. We had some great talks. We had some great events. We had some great sessions. The markets were giving us food all the time to feed on. And I think that the next year is going to be another crazy one. Believe me, I think 2025 was a crazy one. I think the 2026 will be another piece of madness, but still, this is what the market needs. And for traders and investors, we always seek opportunities, and unfortunately, I don't know, fortunately and unfortunately, this is what we get. So, ladies and gentlemen, I would like to invite you to my next little video session in the new year on the 7th of January, because that's when the next Markets Talk session will be. So hopefully you enjoyed this one. I hope, I wish you a fantastic start of the new year. I wish you, that, as always, what they say, so that all the bad things, would stay in the previous year, and only good new things would start in the new year. So I wish you all that, ladies and gentlemen. Thank you very much for your support this year. I really appreciate that, and Happy New Year. And I hope, like I said, I hope to see you all in my next little session on Wednesday, on the 7th of January. Stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. See you in the new year.